Sir, very happy evening to all.
Happy evening, sir.
Sir, we are in the part 2 of computation of GST payable. We are having 3 questions, man. In that, question number A is the target. Priya Infra Limited, a registered supplier under GST in the state of Kerala. So they have registered in Kerala. Is engaged in the construction business. They are doing construction business. Fine. It provides the following information for the month of April. So for one particular tax period, they have given the details for the month of April. Outward supply, they have listed and given. Thank you. Inward supply, they have listed and given. Thank you. So on outward supply, we can calculate the output tax collected. And inward supply, we can calculate the ITC. Sir, in that inward supply, sometimes RCM will be there. That has to be added to the output tax liability and also added to the ITC. Automatically, it will get knock off. I am going to read the first part of the question. Transferred one load of tiles. One load of tiles. Tiles they have sold, transferred to its branch in Cochin, Kerala, where the head office is situated, Kerala. And again, branch also situated in Kerala. From its head office at Trivandrum, Kerala. So from Trivandrum, they have transferred the tiles to Cochin, Kerala. Both are Kerala only. Both places are under the same GST registration. So this is an intra-state supply. This will not amount to distinct person under section 25 subsection 4 or under section 25 subsection 5. 25 subsection 5. Hence, no need to collect output tax on this 7,50,000 rupees, right? We are going to read that particular adjustment. Transfer of tiles to branch within Kerala. Such transfer is not a supply as the branch has the same GSTIN as that of head office, and thus it is not a distinct person. This we have clearly discussed in the supply chapter. That the provision, what are the provisions applicable are, you have to check whether it is an interstate supply or intrastate supply. If it is interstate supply, whether registered or unregistered, if it is registered, it will fall under section 25 subsection 4. If it is unregistered, it will fall under section 25 subsection 5. Whereas intrastate supply, multiple registration, single registration. Multiple registration, deemed supply. Single registration, not a supply. That was the provision we have to apply. Fantastic to the core. Coming to the second point. Point number 2. Provided pure labor services of construction of single commercial unit not forming part of any complex to a customer in Bangalore, Karnataka. In between, they have added just one word, that commercial unit. If the same line, if it is residential unit, it is exempt from GST. This we have studied in section 11, exemption. So my dear lovable students, provided pure labor service of construction of single commercial unit, commercial unit. Since it is commercial, that too, the customer is situated in Karnataka, my dear lovable students, for this you are liable to collect what? IGST. IGST has to be collected. So, what is the rate available? Rate of CGST, SGST and IGST are 9%, 9% and 18% respectively for both inward and outward supply of what or what? Goods or services. So, interstate supply of pure labor services for construction of single commercial unit in Bangalore. Services by way of pure labor contract of construction of original work pertaining to a single what unit? Otherwise, that as a part of residential complex is exempted. Hence, such service in relation to a commercial unit shall be taxable. So, 15 lakh into 18%, 2,70,000 rupees is the output tax collected. Fantastic to the core. In examination, in our reading, we may say that it is exempted. It is exempted if it is residential unit, but not commercial unit. Coming to adjustment number 3. Supplies a consignment of marble. Since they are in construction industry, that's why they are selling tiles and marbles and all. In the territorial waters to Classic Builders LLP. Sir, territorial waters, if the supply has been made in the territorial waters, the nearest coastal line will be treated as the place of supply. The said territorial waters is located at a distance of 11 nautical miles from the baseline of the state of Kerala and 12 nautical miles from the baseline of the state of Tamil Nadu. Which is the nearest coastal line? Kerala. Supplier is in Kerala. Place of supply is also situated in Kerala. Hence, it's a dash state supply. So, for this 6 lakh, CGST and SGST has to be collected. Fantastic to the core. So, supply of consignment in territorial water, where the place of supply is in territorial water, place of supply is deemed to be in coastal state, where the nearest point of the appropriate baseline is located. Therefore, place of supply will be in Kerala, being nearer to the baseline, and hence supply will be what state supply? So 6 lakh into 9% comes to 54,000, and 6 lakh into 9% come to 54,000 is the CGST and SGST to be collected. Comfortable, sir? Received an advance for future supply of goods and services from a customer in Kerala, of which 70% is related to future supply of what? Services. So 7 lakh has to be classified into two categories, 70% and 30%. 70% is for services and 30% is for. So 7 lakh into 70% comes to 4,90,000 rupees is the advance for services. We all know that for advance for services, notification will not be applicable. Notification number 66/2017 will not be applicable, right? So for goods, the time of supply will be at the time of invoice. At the time of invoice. So on advance basis, no need to pay GST for what? Goods. But for services, you are liable to pay the what? GST. So received an advance for supply of goods and services are from a customer in Kerala. So for this 4,90,000, customer in Kerala, intra-state supply, CGST and SGST has to be collected. So my dear lovable students, receipt of advance from customer in Kerala, tax will be payable only on advance for its what? Services. In case of goods, tax is payable at the time of issuance of invoice and not at the time of receipt of what? Advance. So 7 lakh into 70% into 9%, 44,100 is the output tax collected. 7 lakh into 70% into 9%, 44,100 is the SGST collected. Comfortable, sir? Computer used for what purpose? Business purpose. Business purpose. So you have purchased a computer for business purpose. Was given free of cost to an unrelated person based in Kerala. Permanent transfer or disposal of business asset. That I don't know. That we have to read the question where ITC has been availed or not. Computer was purchased 2 years back at a cost of 88,500, including GST of 13,500, having WDV of 71,685 as on date of sale. Open market value is how much? 55,000, excluding what? GST. No ITC is taken on this computer at the time of purchase. Since no ITC has been taken, it will not fall in Schedule 1 to Para 1. Schedule 1 to Para 1. Sir, since there is no consideration, no GST, because as per section 7 subsection 1 clause A, supply includes all forms of supply of goods or services or both, such as sale, barter, transfer, exchange, license, lease, rental or disposal, made or agreed to be made for a consideration by a person in the course of furtherance of business. If no consideration, no GST. Even though there is no consideration, the exception to 7 subsection 1 clause A is covered in 7 subsection 1 clause C, read with schedule 1, read with para 1, 2, 3, 4. Sir, in neither of the para, this transaction is not covered. So if there is no consideration, no GST, my dear lovable students. That means computer given free of cost to unrelated person, no GST. Since ITC has not been taken on the computer, permanent transfer of the same without any consideration to an unrelated customer shall not amount to deemed supply in terms of what one? To the CGST Act. Further, since no ITC has been taken, question of reversal of ITC attributable to the remaining useful life of computer does not arise because no ITC has been taken. So no need to reverse the ITC also. You know one thing we have done with all the outward supply. So if you add, you will get the total output tax GST. 98,100 CGST, 98,100 SGST, and 2,70,000 of what? IGST. Coming to inward supply. Availed service of arbitral tribunal. It's a RCM, reverse charge mechanism. Legal services can be provided either by individual advocate or group of advocate, including a senior advocate. Legal services provided by an arbitral tribunal to a business entity. Business entity is the person located in taxable territory, liable to pay tax on. Sir, availed service of arbitral tribunal in Trivandrum, Kerala to settle a case relating to RERA Act for this 7 lakh. They are liable to pay tax on RCM. Since they are paying tax on RCM, it has to be added to the output tax liability, and that amount can be taken as ITC. In 2 places it should add that, man. One to the output tax liability and also to the... Yes, sir. So you will be getting the GST payable under reverse charge. Tax on services provided by arbitral tribunal is payable under what charge? By the recipient of the service. So the value into CGST, sir, 63,000 and 63,000 SGST. Comfortable, sir? And this can be taken as what also? ITC also. Service of an arbitral tribunal. Service provided by an arbitral tribunal to a business entity with an aggregate turnover up to threshold limit of registration in the previous financial year are exempt from GST. We know that. Sir, if you see section 11, legal services provided by an arbitral tribunal. Yes, sir. Sir, business entity whose turnover in the immediately preceding previous year does not exceed threshold limit for registration is exempt from GST. So, what is the status for this guy? Whether this guy's turnover of Priya Infra Limited for the previous financial year was 180 lakh, which was much more than the threshold limit for registration. That means in the last year they are what person? That means, sir, they are compulsory liable to pay tax on RCM. Sir, exemption will not be applicable. Services of arbitral tribunal. Services provided by an arbitral tribunal to a business entity with an aggregate turnover up to threshold limit of registration in the previous financial year are what from GST? The services provided by arbitral tribunal to Priya Infra Limited, business entity whose aggregate turnover in the preceding what year? Exceeds the applicable threshold limit for registration 20 lakh. 20 lakh. Being a supplier of goods and services in the state of what? Kerala. Shall be liable to tax, because exclusively goods only 40 lakhs will be applicable. If you are supplying both goods and services, sir, 20 lakhs will be the turnover limit. Further, being service used in the course or furtherance of business, ITC shall be available thereon. So 7 lakhs into 9%, 63,000 and 63,000. This amount only we have added to the what tax liability. And also this can be claimed as ITC. Fantastic to the core. Coming to the next one, man. The next inward supply I am going to read. Purchased construction material from Bahu Steels Limited, registered in the state of Andhra Pradesh. It's a what state supply? Interstate supply. So what we would have paid? That IGST we can claim it as ITC. So we have to add only in one segment, which is in the ITC details. Right? Is there any specific note available to Bahu? Question number 3, note number 3, we have to read. E-invoice portal shows that Bahu Steels Limited GST number has been enabled for what invoicing? That means the supplier is supposed to raise the invoice on a e-invoice basis. However, supplier did not issue e-invoice or tax invoice with, sir, IRN. If e-invoice has been issued without IRN, it will be treated as an invalid invoice. You are not entitled to take the what? So the invoice was reflected in GSTR 2A. That is not the condition. The invoice should be a possession of valid tax paying invoice. So mandatorily IRN should be there. Because of lapse of IRN, you are not entitled to take ITC. So purchase of material from Bahu Steels Limited. An e-invoice without IRN is not treated as invoice, and hence without a valid tax paying document, ITC cannot be claimed on such input as per section 16 subsection 2. In order to claim ITC, 5 conditions should be satisfied. One of the conditions is possession of valid tax paying document. Sir, actual receipt of goods or services or both. ITC should not be restricted. Sir, tax should be paid to the government and the furnishing of return. In that, one of the condition is possession of valid. Without IRN, we cannot say that the invoice is a. So based on that invoice, we are not entitled to take the. So this amount cannot be taken as ITC. Purchased new truck. Only motor vehicle is covered in the blocked credit. Truck is not covered in the. From a dealer in Cochin, Kerala for transport of material. So you would have paid CGST and SGST. You are entitled to claim it as ITC, but we have to check any notes available for that. Company claimed depreciation under the Income Tax Act on the new truck purchase, including all applicable taxes. As per section 16 subsection 3, if depreciation claimed on tax component, then there is no ITC. Sir, those who have solved 25 ITC question along with me, this will be a cakewalk. So from here onwards, sir, whether you are having knowledge in ITC or not matters a lot. So my dear lovable students, I cannot take that as what? ITC, purchase of truck. Motor vehicle used for transportation of goods is eligible for credit. However, since depreciation has been claimed on applicable taxes as well, ITC of tax paid on purchase of such truck cannot be claimed. Comfortable, sir? Coming to the next point. That's it. All the inward supply we have done. Sir, anything notes we have missed, we will read it. Company provided the following additional information. Paid 6 lakh as remuneration to an independent director based at Cochin during the month. Sir, they are not dependent director. If they are dependent director, it will be covered in schedule 3, neither supply of goods nor supply of. Since he is independent director, it is covered in RCM. It should be added to the output tax liability, and also it can be claimed as ITC. Comfortable, sir? So to the output tax liability adding, sir, tax on remuneration paid to director is payable under what charge? By the recipient of the service, so value into the amount. Sir, here also, sir, payment on remuneration to independent director based at what? Cochin. Service provided by employee to employer in the course of his employment are not a supply. It is neither supply of goods nor supply of. However, independent director is not an employee of the company, and remuneration paid to him is what? Further being services used in the course or furtherance of business, ITC shall be available to him. 6 lakh into 9% and 6 lakh into 9% comes to 54,050. Comfortable, sir? Is there any other point we'll be checking in the notes? We have read that note number 2, note number 3, even note number 4 also. A rate of CGST and SGST. That's the first note we have read. Based on that number only, we have calculated everything. All the above given above are exclusive of taxes applicable. Sir, I can bet you that all the points you will be able to appreciate or understanding this. I hope that you are able to connect with the provisions. From the information given above, you are required to compute the minimum net GST liability payable in cash, CGST, SGST, IGST as the for the month of April. Reason for treatment needs to be given. So we have already finalized the output tax payable, net output tax payable in cash, sir. Sorry, net output tax collected 98,100, 98,100 and 2 lakh 70,000. Against that, can we claim ITC? Yes, sir. ITC include whatever tax we have paid on purchases plus whatever tax we are supposed to be paid on RCM. The total ITC amount comes to 1,17,000, 1,17,000 and dash. So we are having CGST credit and SGST credit. If you see, we are having 2,70,000 rupees of IGST payable. So take the CGST credit. What was the CGST credit available? 1,17,000. Knock off that 1,17,000 against the 98,100, right? So 1,17,000 minus 98,100 comes to how much? Still 18,900 is there. You can use that credit to knock off the IGST credit. So 18,900 has been used to knock off the. IGST payable, 98,100 is the SGST payable. I am having credit of 1,17,000. Knock off that. Still the same balance will be there, 18,900. That extra credit can be utilized to pay the IGST credit. So the net CGST payable will be 0. Net SGST payable will be 0. But the IGST payable will be 2,32,000. But sir, in this ITC, inside the ITC, who is there? In order to claim that as what? ITC, we have to pay from our pocket. And tax on service provided by the arbitral tribunal is payable under RCM. Tax on remuneration paid to director is payable under RCM. So GST payable in cash under what charge? Reverse charge. Totally 63,000 and 54,000. 63 plus 54 comes to 1,17,000. There is no output tax liability, 0. 0 plus 1,17,000. Minimum net GST payable comes to 1 lakh. This 1,17,000 is full of what? RCM. So that 1,17,000 RCM you have taken as what also? ITC also. Are you really with me? Sir, here also the output tax collected will be 0. Sir, after net off, correct? Sir, output tax added as what? RCM payable is 1,17,000. Here there is no RCM payable for IGST. 2,32,200 is the amount of what payable? Sir, when you read now the question number 4, you'll be feeling so much comfortable. I will tell you one thing, don't read the question, don't listen to the question. You have to do the question. You have to do the question. Then only you will be getting the writing practice, my dear lovable students. Otherwise, you'll be having a mental satisfaction that yes, I have gone through 4 or 5 or 6 questions. Hello, sir. So don't do that, sir. Don't not only listening to the question, after listening to the question, or better, before you listen to a particular question, solve the question, and for clarifications you listen, then the level of understanding will be very level. So in part number 2, we have completed question number A. Sir, once you done the question, sir, I will be solving illustration number 5, which is, sir, question number N, which is a May 2022 question. Comfortable, sir? Sir, very happy morning to all. So we are doing part 2, in that we have solved question number 1. We have to solve the second question, but that second question is based upon a rule. That rule we have actually discussed in the class, but I am just recalling that rule, then we will be doing that particular sum. So we are having 2 rules are there. Rules classified into 2 categories. Rule number 86A and rule number 86B. These are the 2 rules. These 2 rules are talking about the restriction for availment of ITC. Rule number 86A is restricting to take ITC the balance available in the electronic credit ledger. Sir, restriction on utilize of balance in electronic credit ledger under these conditions, man. The commissioner or an officer authorized by him in this behalf, not below the rank of the assistant commissioner, additional commissioner, having reason to believe that credit of ITC available in the electronic credit ledger has been fraudulently availed or ineligible. In these 4 circumstances, circumstance number 1, circumstance number 2, circumstance number 3, and circumstance number 4, may for reason to be recorded in writing not allow debit of an amount equivalent to such credit in electronic credit ledger for discharge of any liability under section 49 or for claim of any refund of any unutilized amount. That means if you are accumulating the ITC in the electronic credit ledger because of these 4 circumstances, then the proper officer will not allow you to take it as ITC. What are the 4 circumstances? You revise because I have completed, because my target is to not to recall 86A. There is one more section called as one more rule called as rule 86B. Restriction on use of amount available in electronic what ledger. Notwithstanding anything contained in these rules, whatever we said in these rules, put it on dustbin. A registered person shall not use the amount available in the electronic what ledger. Sir, even though you are having balance available in electronic credit ledger, you are not supposed to use that amount to discharge its liability towards output tax. So you cannot use the ITC available to discharge the output tax in excess of, sir, 99%. 99% of what is a big question of such tax liability. It's not the 99% of the ITC available, 99% of the tax liability. In cases where value of taxable supply other than exempt supply and zero rated supply in a month exceed 50 lakh rupees. The condition is the value of supply other than exempt supply and zero rated supply. That means taxable supply should be more than 50 lakhs. If the taxable supply is more than 50 lakhs, then you are not entitled to claim 100% of the output tax payable from the electronic credit ledger. You can claim only 99% of the output tax payable as ITC from the electronic credit ledger, provided that said restriction shall not apply where. For this restriction, sir, rule number 86B, we are having exception number 1, exception number 2, exception number 3, exception number 4, exception number 5. Sir, in these 5 exceptions, my dear lovable students, this 99% restriction will not be applicable. Exception number 1, said person or the proprietor or the Karta or the MD or any of its two partners, old-time directors or member of managing committee or association of board of directors as the case may be, have paid more than 1 lakh rupees as income tax under the Income Tax Act. So if that person has paid more than 1 lakh as income tax in each of the last 2 financial year for which the time limit for filing return of income under subsection 1 of section 139 has been expired. That means if they paid income tax of how much lakh? 1 lakh, this 99% restriction will not be. The registered person has received a refund amount of more than 1 lakh in the preceding financial year on account of unutilized ITC under 54 subsection 3 clause 1. Clause 1 is on account of zero rated supply and clause 2 on account of inverted duty structure. The registered person has received a refund amount or more of 1 lakh in the preceding financial year on account of unutilized ITC in 54 subsection 3 clause 2. Even that is also covered. Sir, basically you are getting a refund of more than 1 lakh. Either under section 54 subsection 3 clause 1 or 54 subsection 3. Fantastic to the court. So the registered person has discharged his liability towards what tax? Output tax through electronic what ledger for an amount which is in excess of 1% of the total what liability. Sir, check current month's output tax liability. For that output tax liability you have to take 1%. Till now have they discharged through electronic cash ledger that amount applied cumulatively up to the set month in the current financial year? Or the registered person is a government department, public sector undertaking or local authority or a statutory body, provided further that commissioner or officer authorized by him in this behalf may remove the said restriction after such verification and safeguard as may deem fit. So if the case or circumstance is falling under these 5 exceptions, then 99% restriction will not be applicable as per rule number what B? 86B. So there are 2 restrictions are there, rule number 86A and rule number 86B. Sir, rule number 86B we have done. Sir, I'll be reading one example. Everything has been done in the class, but just to get fall into 86B. The total value of interstate supply of Raman and Sons for the month of February is 100 lakhs, which is more than 50 lakh. Said supply is taxable at 18% IGST. The total output tax liability of Raman and Sons is how much lakh? 18 lakh, which is nothing but 100 lakh into 18% comes to amount available in electronic credit ledger comes to how much lakh? In terms of restriction imposed by rule number 86B, Raman and Sons can discharge 99% of its what tax liability? Output tax liability. So 18 lakhs into 99% comes to 17 lakh from the amount available in electronic what ledger. However, it has to mandatorily discharge the balance 1% of the output tax liability, which come to how much rupees? Through the electronic cash ledger only. That means you have to see what is your output tax liability, multiply 99% of the output tax liability. That amount can be discharged through electronic credit ledger and balance as mandatorily to be discharged through the electronic. But if you are falling in 5 exception, my dear lovable students, then no need to restrict to 99%. You can enjoy 100% if the balance is available in the electronic. Assuming a scenario wherein in the current financial year up to August month, the total output tax liability payable is 30 lakh till this month 30 lakh. Such registered person has deposited 1 lakh through electronic what ledger? Cash ledger, and balance through electronic what ledger? Credit ledger. So 30 lakhs into 1% comes to 30,000. But through electronic cash ledger, they have paid 1 lakh, which is more than 1%. So rule 86B would not be applicable. In September month, even if the taxable turnover during this month exceed how much lakh? Since cumulative payment of tax made in cash is more than 1% of the total output tax liability. So 30 lakhs into 1% come to 30,000. Since they paid through electronic cash ledger 1 lakh, which is more than 1%, restriction of 86B will not be applicable. With this background, I am going to read illustration number 5. Supermarket is a proprietary firm and GST registered supplier in Ahmedabad, Gujarat. The details of supply, purchases and expense for the month of December of supermarket are given below. Details of outward supply, intra-state supply 45 lakh. For this intra-state supply, CGST and ESGST, CGST and SGST has to be collected. Interstate supply, IGST has to be collected. Exempt supply under GST, it is covered under section 6 of the IGST Act, so no tax need to be collected. Details of inward supply, intra-state supply, sir, CGST and what, sir, SGST would have been paid. Interstate supply, IGST would have been paid. Exempt supply under GST, we would have not paid anything, my dear lovable students, because it would have been covered either under section 11 of the CGST Act or 6 of the IGST Act as the. Now, details of expenses. This expense and all paid, some expense may be FCM or some expense may be RCM, we have to check. Freight paid to GTA for intra-state transportation of goods. 20% of freight paid was towards transportation of goods, not liable to what? GST. So totally 60,000. So they are asking you to apportionment, which is 80% and 20%. 80% is for, sir, taxable goods, whereas the remaining 20% is not liable for GST. So I have to apportion the amount and I have to do the calculation. Here, sir, apportionment concept will be applicable. Telephone expenses out of the above, total telephone expenses is 30,000. Out of the above, 18,000 was spent on landline installed in sales outlet. Rupees 12,000 was spent on phone provided to employee in relation to work of the firm. Both are in the course of furtherance of business. ITC is allowed, no need of apportionment. Premium paid on insurance taken on car. Car is a motor vehicle. You have to check whether that car is blocked credit or not. Right? Used by proprietor of the firm in relation to work of the firm is blocked credit. Since a car is blocked, automatically the expenses relating to that car is also fantastic to the core. Outdoor catering service expense incurred during Diwali celebration in sales outlet is blocked because outdoor catering are blocked. It does not fall in the exception. We are having exception. It is in the similar line of business or outdoor catering has been used to provide a outward taxable or mixed supply. Then that can be taken as ITC. Monthly rent for premises of sales output. It is in the course of furtherance of business. ITC can be taken. It is further given that all the amount given above are exclusive of all taxes wherever all inward and outward supply are made by supermarket from or to registered place of business in what? Gujarat. Inward supply of 50 lakh were used only for making what supply? And exempt inward supply of 5 lakh were used only for making exempt what supply? So 50 lakh is exclusively for taxable supply. 5 lakh is exclusively for. So they have given totally 55 lakhs of inward supply detail. The remaining balance will be the common credit that may be used for both taxable as well as exempted. Sir, wherever, sir, used only for making exempt outward supply. Wherever applicable for purpose of reverse charge payable by supermarket, CGST, SGST and IGST rate are 2.5, 2.5 and 5 respectively. In all other cases, CGST, SGST and IGST rate are 9, 9 and 18. There is no balance in the electronic cash ledger or in electronic credit ledger. Subject to the information as given above, all other conditions necessary for availing ITC have been. You are required to compute the following. ITC credited to the electronic credit ledger. What is the amount is going to be credited to the electronic credit ledger? So you have to take all the eligible ITC, including common credit. So that will be the amount going to be credited to the electronic. Common ITC available for apportionment. From that, basically you have to reduce T4. If you reduce T4, you will get the C2 common credit. That has to be apportioned into two categories. Number one, sir, exempted, the ITC attributable to exempted and ITC attributable to. From this area alone, we have done 25 questions from the ITC chapter. Without seeing that video, if you are listening to this topic, it will be little tough. Sir, complete that. That is a very important area for examination. ITC attributable to exempt supply out of the common ITC. So common ITC has to be apportioned to two categories, ITC attributable to taxable supply and ITC attributable to. You are required to examine the applicability of Rule 86B of the CGST rules. Just now we revised Rule 86B relating to utilization of ITC and if applicable. So you have to check whether the outward supply has exceeded 50 lakhs or not without, sir, including exempt supply and zero rated supply. Calculate the amount of ITC available for utilization towards payment of what? GST. However, there is no need to explain exception to Rule 86B. There are 5 exceptions are there. Sir, you have to assume that this scenario is not covered in any one of those 5 exceptions. Hence, 99% concept will be applicable. Make suitable assumption wherever required and working notes as may be needed. Brief notes are required only to support the calculation and the numerical output required in the name of common ITC available for apportionment and applicability of Rule 86B of the what rules. Ensure that every transaction in the question is covered in the answer for purpose of calculation of numerical outputs. This is a May 2022 question, a brilliant, super, normal, easy question. Come on, we'll be doing one. We are going to find out the GST liability. We all know that GST liability is nothing but output tax collected minus input tax paid. So I am going to work out the output tax collected first. GST paid on intrastate inward supply. First we will be finding listing of the ITC part. Okay. GST paid on intrastate inward supply. You tell me, they themselves given inward supply, details of inward supply has been given. What is the inward, sir, intrastate supply? 40 lakhs. For this they would have paid what and what? CGST and SGST. Sir, the rate is 9%, 9%, 18%. So how much into how much? 40 lakh into 9%, 3 lakh 60,000. 40 lakhs into 9%, 3 lakh 60,000 SGST. Right? This can be taken as ITC. Now, next one. GST paid on interstate inward supply. Taxable at how much percent? You tell me what is the interstate supply? 10 lakh. 10 lakh into how much percent? So they would have paid 1,80,000 as what? IGST can be taken as. Now inward supply exempt from GST. Since it is exempted, no GST would have been paid. Tell me what is the amount? 5 lakh. 5 lakh since it is exempted at the time of procurement, they would have not paid any GST. So dash dash dash. Are you comfortable on purchases? I am coming to expenses, man. Freight paid to GTA for intrastate taxable goods 2%. Sir, since RCM, freight, GTA, normal rate will not be applicable. RCM rate will be, sir, since rate of GST on GTA services how much percent? 2.5%. Tax is payable under what charge? Reverse charge. Because GTA is a reverse charge mechanism. You read it, this line. Freight paid to GTA. So we paid freight to whom? GTA. For intrastate transportation of goods. 20% of the freight was paid towards transportation of goods, not liable to what? If you read the below note here, sir, where applicable for the purpose of reverse charge payable by supermarket, CGST, SGST, IGST rate are 2.5, 2.5 and 5% respectively. Question, nowhere said that the GT has adopted the FCM, so RCM provisions will be applicable. If question specifically saying that the GT has adopted what? FCM, then we will not use the RCM. In that two category are there, 20%, 80%. So freight paid to GTA, sir, total freight, how much is the total freight paid? 60,000. So you have to put 60,000 into 80%. 60,000 to 80% come to 48,000. Is this 48,000 has been used for taxable or exempted? Taxable supply. So this can be taken as what? ITC. So basically we are finalizing the ITC part in the computation of total GST payable part. So 48,000 into 2.5% will be the CGST, right? How much? 1,200, and 2.5% come to SGST. Sir, 1,200. My dear lovable students, this amount has been added to the what tax? Output tax. Not only this amount, but also 20% has to be added. But out of that, only 80% is eligible for what? ITC. Because that only has been used for, fantastic to the core. The same type of question, 25 question we have already solved in the ITC part. If you done that, only computation of total income is possible. 25 question we have solved, right? GST on freight paid to GTA for intra-state exempt supply, 2.5% under what charge? The reverse charge. ITC on input service used exclusively in relation to exempt supply is not available. So 60,000 to 20% come to 12,000. For this you would have paid what? RCM, but that amount cannot be taken as ITC. So in the eligible ITC list we have put a dash dash dash. Comfortable, sir? Coming to GST on telephone expenses at the rate of 9%, because telephone expenses are not RCM, telephone expenses are FCM, so 2.5% will not be applicable. You read the telephone expenses total 30,000. Out of that, 18,000 was spent on landline installed in the sales outlet, and rupees 12,000 was spent on phone provided to employee in relation to the work of the firm. Both has been used in the course of. So you are entitled to claim ITC for 30,000. So 30,000 into how much percentage? 9%, 2,700 and 2,700. Sir, you can claim it as ITC. This amount no need to add to the output tax liability, because this is FCM, not RCM. Premium paid on insurance taken on car used for firm's work, ITC is blocked under 17 subsection 5 on general insurance service relating to those motor vehicle which are ineligible for what? ITC. So for this amount you would have paid what? GST, but this cannot be claimed as, because this is a what credit? Fantastic to the core. Outdoor catering services, ITC on outdoor catering is blocked under 17 subsection 5 if the same is not used for making an outward supply of outdoor catering, that is similar line of business, or as a element of taxable compositor. So since here it has been used for consumption, not for further supply of outward supply, or not to provide a taxable composite or mixed supply, then my dear lovable students, whatever GST paid on outdoor catering services cannot be taken as GST on monthly rent of premises or sales outlet at 9%. This is FCM, not RCM. Since it has been used for the course or furtherance of business, you can take it as what? ITC of service used in the course or furtherance of business is available. So my dear lovable students, sir, 60,000 into 9% come to 5,400 and 9% come to 5,400. So that is eligible. So this is the ITC credit to be credited to the electronic credit ledger, 3,69,300, 3 lakh, one second, we have to add 3,60,000 plus 1,200 plus 2,700 plus 5,400 comes to 3,69,000. Here also it should be 3,69,300 and 1,80,000. There is no difference, no? All credit are same. All right. It's just a jumbling of numbers. So 1,80,000. This is the amount you are going to be credited to the electronic credit ledger. Right. Assumptions or notes, very important part of the question. It has been most logically presumed that, we have assumed that remaining 80% of the freight, because freight has been classified into how many categories? Two categories, 20%, That 20% has been used for exempt supply, exclusively exempt supply. That's what very important. Since it has been used exclusively for exempt supply, the credit attributable to that 20% we have not taken as what at all, ITC at all. But remaining how much percent of the freight has been paid exclusively on transportation of taxable outward supply. This is our assumption. So on that remaining 80%, we have not applied the apportionment concept. On apportionment, we have not applied the apportionment. Right? Of goods, and GTA providing such service is registered in the state of what? Gujarat. Because we are situated where, sir, supermarket is a proprietary firm and GST supplier, sir, registered supplier in Ahmedabad, Gujarat. We have assumed that even the GTA is also situated in Gujarat, then only it will become a intra-state supply, then only CGST and SGST will come. Of that 80%, we can claim it as ITC, remaining 20% has to be put it on dustbin. Comfortable, sir? That is the first assumption. Assumption number 2. It has been most logically presumed that freight has been paid on transportation of outward supply of what goods? Exempt goods. That means freight has been paid on transportation of what goods? Exempt goods. In case if it is assumed that freight has been paid on transportation of inward supply of what goods? Exempt goods. Sir, we assume that outward supply of what goods? Outward supply of exempt goods. If it is for inward supply of what goods? Exempt goods. Amount of ITC available with regard to the same will change accordingly. That means, sir, if the amount of ITC paid is on inward means it is not entitled for what? ITC. For outward means, sir, exempted category, GST, sir, paid. Telephone expenses have been considered to be in the nature of what services? We are having only 3 options. Either we have to treat it as input or input services or capital goods. So telephone has been assumed to be what services? Once it become input services, you are entitled to take ITC. Further, it has been assumed that supplier is registered in what? Gujarat. Then only CGST and SGST will be applicable. It has been assumed that supplier of service of renting of premises is registered in the state of what? Then only CGST and SGST has been applicable. These are the 4 assumptions, my dear lovable students. Fine. Now, out of the amount credited to the electronic what ledger? Credit ledger. We know T4. From that, if you reduce T4, you will be able to get the C2. So, computation of common ITC available for what? Apportionment. What is the ITC credited to the electronic credit ledger? 3,69,300, 3,69,300 and 1,80,000. In that, less ITC of taxable goods, exclusively used for taxable goods. Sir, we know that exclusively used for taxable goods are 3,60,000, 3,60,000 and 1 lakh what? 80,000. These are exclusively taxable goods. There is no, sir, exempted component. So that we are reducing as T4. One more is there. ITC on freight paid for GTA for transportation of what goods? Actually, how much rupees has been paid? 60,000 has been paid. Out of that 60, we are split into 2 category, 20%, 80%. That 20% we have put it on because that has been used exclusively for the remaining 80% has been assumed that which has been exclusively for. So this 1,200 will also form part of T4. That also has to be reduced, my dear lovable students. The balance common credit for apportionment C2 will be 8,100 and 8,100. Comfortable? That means there is no common credit for IGST at all. 8,100 and 8,100. Now this 8,100 has to be apportioned into 2 categories. Credit attributable to the exempt supply and credit attributable to the, which is nothing but common credit into E by F formula you have to apply. Computation of ITC attributable towards what supply? Exempt supply. ITC attributable towards exempt supply is equal to what credit into? Aggregate value of the exempt supply during the year divided by total turnover during the tax period. We have just now understood that 8,100 is the common credit. Into they themselves given that the turnover details in the question. Sir, here you look at here, what is the total outward supply is 45 lakh intra-state supply, 15 lakh interstate supply. 45 plus 15 comes to 60 lakhs, and 6 lakhs is exempt supply. So 6 lakhs divided by 66 lakhs is the proportion. Sir, 6 lakhs is the exempt supply and 66 lakhs is the total turnover. Comfortable, sir? They have straight away given in the question, man. 6 lakhs divided by 66 lakhs. So my dear lovable students, so how much into how much? 8,100 into 6 lakhs divided by 66 lakhs comes to 736, and 736. This amount of ITC cannot be taken. This is ineligible. You have to add to the output tax liability and you can claim 100% ITC, or you have to reverse this amount from the electronic what ledger? Credit ledger, which is how much rupees, man? 730. Assumption or note, telephone expense have been considered to be in the nature of what services? However, it is also possible to consider the telephone expense to be in the nature of what goods? Capital goods, to be reversed in accordance with the provisions of Rule 43 of the CGST rules. So we have no need of it. We have treated the telephone expenses as input services. Better straight away, one shot, you can take it as what? ITC. Fantastic to the code. So we have calculated what and all we have calculated. You just think, sir, first we have finalized the eligible ITC amount to be credited to the electronic. Instead of computation of GST liability, we can make like this, sir, amount to be credited to the amount to be credited to the electronic credit ledger. So we are going to credit, sir, 3,69,300, 3,69,300 and 1,80,000 to the electronic what ledger? Credit ledger. In that T4 are there. These are the two T4. If you reduce the T4, you will get what to C2. That's also fine. Fantastic to the code. Now I am going to calculate, sir, computation of ITC available for utilization towards payment of tax in terms of rule number 86B. Now the implication of rule 86B is coming. We all know that maximum amount of output tax liability that can be discharged from the electronic credit ledger is 99% of the what tax liability. Don't understand that whatever amount available in the electronic credit ledger, sir, the amount available into 99%. No, sir, output tax liability into 99%. That is a, sir, biggest understanding from this question for you. Since the value of taxable supply other than what supply? In December, which is 45 lakh plus 15 lakh, total comes to 60 lakhs is the taxable supply, which is more than how much lakh? Amount from electronic credit ledger which it can use to discharge its output tax liability of the set month cannot exceed 99% of the such tax liability in terms of rule number 86B of the CGST rules 2017. Comfortable, sir? We have calculated, sir, what is the turnover details. This is the turnover details, my dear lovable students. 45 lakhs is intra-state supply, 15 lakhs is interstate supply, and 6 lakh is exempt supply under what? GST. For the 6 lakh, you leave it. So for this 45 lakh, you will collect CGST and SGST. For this 15 lakh, you will collect what? You have to normally calculate the tax liabilities, which is nothing but 45 lakhs into 9% comes to 4 lakh 5,000 is the output tax payable, right? On that, you have to apply how much percent? 99%. 4 lakh 5,000 into 99%. This is what? 4,950,000. This much amount can be, sir, used from the electronic credit ledger. The same calculation will come for SGST also. Whereas for IGST, man, what is the outward supply value? 15 lakhs into what is the tax rate? Into 99% comes to 2,67,300. 2,67,000. Now I am going and checking what is the amount available in ECL. The amount what we credited to the ECL is 3,69,300. But in that 736 is ineligible common credit, right? So 3,69,300 minus 736 means what is the amount available, man? 3,68,500. And so amount of ITC available for utilization towards payment of tax. Since the ITC available in electronic credit ledger after thereof is lower than maximum I can claim 4,950,000 as ITC. But in electronic credit ledger, the balance available itself is 3,68,564. Then therefore, sir, the entire ITC can be utilized towards payment of what? If this amount available in the ECL is 10 lakh, it would have been restricted to 4,950,000 is what the provisions of rule 86B is all about. Comfortable, sir? So 3,68,000, since the amount available in the electronic credit ledger is less than the 99% of the output tax liability, entire ITC can be taken as, entire amount available can be taken as ITC, because anyway the balance you will go and pay with the electronic cash ledger. That is what the intention of rule number 86B is. At least 1% of the output tax liability you should pay through electronic. Fantastic to the core. What a question, man, my dear lovable students. Now I am reading that question once again. You attach the things here and there. The level of understanding will be very level. Supermarket is a proprietary firm and GST registered supplier in Ahmedabad, Gujarat. Fine. So they are in Gujarat. Details of supply, purchase and expense for the month of December 2021 of supermarket are given below. Details of outward supply, intrastate is 45 lakh, interstate is 15 lakh, exempt supply under GST is 6 lakh. Sir, whenever in a question, the mindset you should have when you are solving the computation of GST payable is, you check the turnover, outward supply. Check, is there any exempt supply given in the what or not question or not. If there is exempt supply, there is a scope for apportionment. If there is no exempt supply, there is only, sir, taxable supply, which may be intrastate or interstate, then concept of apportionment will not be. But in the outward supply, if there is exempt supply, sir, the taxable input would have been used to provide the, sir, exempt supply. For example, telephone I am using. The telephone will not be exclusively used for taxable supply. Telephone is a general office and administration. It will be used for both what and what? Taxable supply and exempt supply. Are you all really with me? So this is the checkpoint you should be having in your mind. You have to analyze the outward turnover. If the outward turnover consists of exempt supply, there one point should strike your brain that there is a scope of. Fantastic to the core. Details of inward supply, intrastate supply, interstate supply, exempt supply. So with this intrastate supply, they would have provided, sir, exclusively intrastate supply, no problem then. Sir, with this interstate supply, they would have provided this. With this exempt supply, what they have done is a matter. With this exempt supply, if they have provided only what? Exempt supply, no problem. But with this taxable supply also they provided the exempt supply, then only concept of apportionment is accruing or arising. Am I right, sir? I am further following, sir. Details of expenses. Freight paid to GTA for intrastate transportation of goods. 20% of the freight was paid towards transportation of goods, not liable to GST. So 20% was for exempt supply. So we can assume that the remaining 80% is exclusively for. That's it, man. So 20%, sir, leave it. Telephone expenses, out of the above, 18,000 was spent on landline installed in what outlet? Sales outlet. And rupees 12,000 was spent on phone provided to employee in relation to what of the firm? Work of the firm. So 30,000 rupees. Since both are in further course or furtherance of business, ITC can be availed. Premium paid on insurance taken on car used by proprietor of the firm in relation to work of the firm, it's a blocked credit straight away. Outdoor catering service expense incurred during Diwali celebration in the sales outlet, it's a blocked credit straight away. Monthly rent for the premises of the sales outlet is 60,000 rupees. Sir, ITC is eligible. It is further given that all the amount given are exclusive of all taxes wherever applicable. All the inward and outward supply are made by supermarket either from or to a registered place of business in where? Gujarat. Inward supply of 50 lakh were used only for making taxable supply. So there is no scope of apportionment. Because you are having inward supply of how much lakh? 50 lakh. Inward supply, look at the inward supply, 40 lakhs plus 10 lakh comes to 50 lakh. Sir, inward supply of 50 lakh were used only for making what supply? And exward, sir, exempt inward supply of how much lakh? 5 lakh. This 5 lakh has been used only for making exempt outward supply. That means it is one-to-one basis. It is what? If it is one-to-one basis, sir, their concept of apportionment will not be wherever applicable for the purpose of reverse charge payable by supermarket. CGST, SGST, IGST rate are 2.5, 2.5 and 5% respectively. In all other cases, CGST, SGST and IGST rate are 9, 9 and 18% each. There is no opening balance in electronic VAT ledger or in electronic VAT ledger, credit ledger, subject to information as given above. All other conditions necessary for availing ITC have been. You are required to compute the following: ITC credited to electronic credit ledger, common ITC available for apportionment, ITC attributable to exempt supply out of common ITC. You are required to examine the applicability of Rule 86B. 86B is a restriction of the CGST rules relating to utilization of ITC, and if applicable, calculate the amount of ITC for utilization towards payment of GST. However, there is no need to explain exception to Rule what? 86B. Make suitable assumption wherever required and working notes as may be needed. We have done so many assumptions. Brief notes are required only to support the calculation, and numerical output required in case of common ITC available for apportionment and applicability of Rule 86B of the CGST rules. Ensure that every transaction in the question is covered in the answer for the purpose of calculation of numerical output. So, everything we have done, just I am reading the assumption what they have taken. Now, sir, when I read the question again, lot of things will be connected for you. Alright. It has been most logically presumed that remaining 80% of the freight has been paid exclusively on transportation of taxable what supply? Of goods. And GTA providing such service is registered in the state of Gujarat. That is why CGST and SGST we have taken as credit. So total GTA paid classified into how many category? Two category. Number one, 80%, 20%. 20% is exclusively for exempt supply. So that amount we can take it as. That's why in the amount credited to the electronic credit ledger, we have not included that 20%. Whereas 80% we have assumed that it is exclusively for providing taxable supply. So the entire amount we have taken to the what? Electronic credit ledger. It has been most logically presumed that freight has been paid on transportation of outward supply of what goods? Exempted goods. So we have paid the freight, right? Freight, what is the freight amount paid? 60,000. Freight paid to GTA for intrastate transportation of goods. They have not mentioned that whether it is we have paid the freight for inward supply or outward supply. Whether to bring the goods to our place we have paid the freight, or whether to sell the goods to the customer place they have not mentioned. Clear? They just said that in the details of expenses what paid? Freight paid to whom? GTA. For intrastate transportation of what? Goods. 20% of the freight paid was towards transportation of goods, not liable to what? So, that 20% we have put it on dustbin, there is no doubt about it. The 80% ITC only we have availed. Now the next assumption is it has been most logically presumed that freight has been paid on transportation of what supply? Of the what goods? Exempt goods. In case it is assumed that freight has been paid transportation of what supply of exempt goods? Inward supply, then amount of ITC available with regard to the same will change accordingly. Because at 80% again you have to apportion. Right? Telephone expense have been considered to be in the nature of input services. Further, it has been assumed that the supplier is registered in the state of Gujarat. It is assumed that supplier of service of rendering of premise is registered in the state of Gujarat. So, we have calculated what is the amount to be credited to the electronic credit ledger and what is the common credit. We have apportioned the common credit based upon exempt turnover and total turnover, and we have checked the eligibility under rule number 86B. That means output tax collected into how much percentage? 99%. Since the taxable supply exceed 50 lakhs. Pakka. Since the amount available in the electronic what ledger, credit ledger is less than the 99%, 100% of the ITC can be taken. This is a past examination question. If you practice like this question before examination, then only you will be able to appreciate or understand. With this we can say that in part number 2, we have done question number A and question number N. We are pending with question number M. which is illustration number 6, my dear lovable students, that will be solving after you solve question number 5. Sir, in part number 2, we are moving to the last question, man, which is question number M, illustration number 6. Mrs. A to Z, a proprietary firm registered under GST, is engaged in providing various services under one roof. Fine. The firm provides the following information pertaining to supply made or input service availed by it during the month of March. Amount collected for loading, unloading, packing, warehousing of potato chips. Potato is agricultural produce. Potato chips are not agricultural produce. It is liable to what? So for of that 15,000 consideration, GST has to be collected. Determine the GST liability inclusive of liability for the supply received also, that means RCM also, of Mrs. A to Z for the month of March with necessary explanation for treatment of each item. Rate of tax for both inward and outward supply, CGST and SGST 9% each, except for the service of renting a vehicle for which CGST and SGST of 2.5% each is applicable. All the supplies are what state supply? That means CGST and SGST at 9% each. So 15,000 into 9%, 1,350 CGST, 15,000 into 9%, 1,350. Loading, unloading, packing and warehousing of potato chips. Loading, unloading, packing and warehousing of agricultural produce is exempted. However, potato chips is not an agricultural produce, hence it is liable to GST. Fees paid for yoga camp. Yoga camp is one of the definition of charitable activity conducted by a charitable trust registered under section 12AA of the Income Tax Act for the employees of the firm. 20,000 rupees. So this guy has provided yoga for the employees, sir. Service provided by a charitable trust registered under section 12AA of the Income Tax Act by way of advancement of yoga are exempted. So fees paid for yoga camp are exempted, sir. You read it. This is not, is this an inward supply or outward supply? Inward supply. Actually, they have paid the fees. This guy says Mrs. A to Z has paid the to a charitable trust. So fees paid for yoga camp conducted by a charitable trust registered under 12AA of the Income Tax Act for employees of the firm. That means, my dear lovable students, from the angle of the charitable trust, they are providing a charitable activity because yoga is included in the charitable activity. It is exempted. So they will not collect GST. So it cannot be taken as what? ITC. Fine. So this 20,000 does not have any implication. Interest received on FD with Apna Bank by the firm, 30,000. We all know that F stands for financial services. Sir, extending deposit, loan or advances in so far as the consideration is represented by way of interest or discount other than credit card services are exempt from GST. So this 30,000 is exempted, man. Interest received on FD, service of extending FD in so far as the consideration is represented by way of interest are exempted, sir. Fantastic to the core. Professional service provided to foreign diplomatic mission located in India. We all know that services provided by a foreign diplomatic mission situated in India are, but this is services provided to a foreign diplomatic mission. It is taxable. So we are supposed to collect what? GST from the foreign diplomatic mission. 50,000 into 9% come to 4,500. 50,000 into 9% come to 4,500. Now for foreign diplomatic mission, accumulated ITC will come. That they can claim it as refund under section 55, read with 54 subsection 2 time limit, which is quarterly basis, which we have completed in the refund chapter. Professional services provided to foreign diplomatic mission located in India is not exempted, whereas foreign diplomatic service provided by foreign diplomatic mission is fantastic to the core. Recovery agent, sir, RCM, recovery agent provided to ABC Finance Limited and NBFC located in Delhi, 1 lakh. So we provided recovery agent services. So service provider is ourselves and service recipient is ABC Finance Limited. They are the person liable to pay tax on RCM. So in our output tax liability, sir, 1 lakh rupees will not come. That's why it is nil. Recovery agent services provide to ABC Finance Limited and NBFC. Since such service are being provided to a NBFC, tax on the same is payable by the recipient ABC Finance Limited under what charge mechanism? Security services provided to XYZ Limited. Again, security services is also an RCM, a registered person under GST. You have to check body corporate or not, right? Sir, this is XYZ Limited, my dear lovable students. Limited in the sense means body corporate. They are liable to pay tax on security services provided to XYZ Limited, a registered person. Since such service are being provided by a non-body corporate to a registered person. So, look at the wording here. Messes, sir, A to Z, a proprietary firm. So, the service provider is not a body corporate. So, a non-body corporate has provided security services to a body corporate. Registered person being body corporate, they are the person who are liable to pay tax on RCM basis. So, since such service are being provided by a non-body corporate to a what person? Tax on the same is payable by the recipient XYZ Limited under RCM. Hence, for us, there is no FCM. That's why dash. Receipts from running an educational institution. We all know that if it fit in the definition of educational institution, it is exempted. Including receipts for providing residential dwelling services. Residential dwelling for residential purpose to an unregistered person is exempt from GST of 18,20,000 by the institution to the students 35 lakh. Entire 35 lakh is exempted, man. Receipts from running an educational institution, including receipts of residential dwelling service provided by an education institution, and service by way of renting of residential dwelling for use as residence are, sir, we are having assumption number 1. It is most logically assumed that education institution is the institution as defined in notification number something bar something. That means they are falling under the definition of the further the balance receipt apart from the receipt of providing what dwelling from running the education institution pertaining to service provided by it to students, faculty and what? Staff. Service provided by an education institution to its students, staff and faculties are, so the remaining portion we are assuming as the service provided to students, staff and faculty, hence it is exempt from. Sir, this question is particularly from the exemption. Fantastic question. They are picking lot of exemption area from A to Z. Supply value including cost of fuel. Fantastic. For provision of renting of motor vehicle services to NPS Limited. So to a company, they have given the renting of motor vehicle 88,000. Supply value including cost of fuel. For provision of renting of motor vehicle NPS Limited. We are not body corporate, but we have given to a body corporate. Then body corporate is the person liable to pay tax. Here, the answer has been written with two alternatives because the question did not mention that motor vehicle is to carry passenger or goods. So I am assuming in two ways. It is assumed that motor vehicle is designed to carry what? Passengers. If that is the assumption, renting of what vehicle services? Since renting of services of renting of motor vehicle including cost of fuel with tax payable as 2.5% CGST and IGST is being provided by a dash corporate, non-body corporate to a, the same is payable by the recipient under reverse charge. If that motor vehicle is meant to carry passenger, if that has been provided by a non-body corporate to a body corporate, then the person liable to pay GST is the body corporate. Hence, it is on RCM. FCM will not be applicable. We are escaped. Alternate number 2. It is assumed that motor vehicle is designed to carry what? Goods. Then renting of motor vehicle services is not exempted. So, we are liable to collect what? GST on FCM. Hello, sir. So 88,000 is the value they have given, into 2.5 percentage come to 2,200, and 88,000 to 2.5 percentage come to 2,200. Are you all really with me? Yes, sir. So this is what alternative 1 and 2. I am reading that once again. Supply value including cost of fuel. That's including cost of fuel is very important. Including cost of fuel for provision of renting of what services? Motor vehicle services to NPS Limited. 80. Here we can assume that that motor vehicle may be for carry passenger or goods. Now you read it. If it is for what? Passenger, RCM. If it is for goods, so it is assumed that motor vehicle is designed to carry passenger, then renting of motor vehicle service. Since service of renting of motor vehicle including cost of fuel with tax payable of 2.5% CGST or what is being provided by a non-body corporate to a what? The tax on same shall be payable by the recipient, that is NPS Limited, under what charge? Reverse charge. Or alternative number 2, it is assumed that motor vehicle is designed to carry what? Goods. So renting of motor vehicle is not exempted. It is what, man? 88,000 into 2.5 percentage. You read this part. Determine the GST liability inclusive of liability for supply what also? Of Mrs. A to Z for the month of March, with necessary explanation for treatment of each item. Rate of tax for both inward and outward supply is CGST each except for the service of renting of vehicle, for which CGST and SGST is applicable. All other supply are what state supply? Intrastate supply. Sir, since the question requires computation of GST liability of supplier Mrs. A to Z, those outward supply of Mrs. A to Z where recipient is liable to pay tax under what charge has not been taken into consideration while arriving its GST liability, because the supplier is not the person who are liable to pay tax. Recipient is the person liable to pay tax on what charge basis? Here what they have given, alternative number 1 again, it is assumed that motor vehicle is designed to carry passenger. What is the value? What is the value? Total 88,000. What is this 5850 and 5850? Total, sir. Total. In alternative number 1, answer total GST liability, which is nothing but, sir, here how much? 1350 plus 4500 plus 2. That's it, plus 0. So you will get 5850 CGST and 5850 SGST if you are traveling through assumption number 1, passengers. But if you are traveling through assumption number 2, the total GST liability will be, we have to again rework, 1350 plus 4500 plus 2200 comes to 8,000. If it is not for passengers but for goods, sir, RCM will not be, FCM will be applicable, hence that liability will be 8050. Comfortable, sir? Sir, this question is exclusively from exemption, my dear lovable students. Exemption combined with RCM. So what you are supposed to do after this question? You have to spend your 30 minutes time on all the exemption A to Z plus all the RCM 9353. Then only you are preparing well for your examination. One side you have to revise the provisions, other side you have to, sir, match the provisions with the question. Then your confidence will be very level. You know one thing, with this part 2 of the discussion, that is part 2 comprising of 3 questions, illustration number 4, 5 and 6 has been done. We will be meeting for part 3, which will be illustration number 7, 8 and 9. Revise properly, do this question, don't listen to the videos. It will be, sir, just make you understand that what and all are there, but when you do, you will understand that how to solve that question. We'll meet at the appropriate time. Thank you. Bye bye from A&M.